Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin chart as Bitcoin has been pumping and actually it exploded through 40,000, appears to be running into maybe a little bit of resistance at 44,000. So with that all being said, let's jump right into the charts. And we will start over here on the weekly chart for Bitcoin USDT pair. Again, it's weekly candles, so each one of these bars represents a week of price action, and we're using the Binance exchange for this price action. Now, as I mentioned, Bitcoin has pretty much exploded straight up, so the question would be, is it getting overextended? And if not, how much higher can it pump? And the first level, just eyeballing the chart, no indicators, that I would be looking at is going to be around this 48,000 level, which obviously would be a level of resistance that it hit back here. But with that being said, I would prefer to have a few indicators to base my probabilities on. Again, we don't make predictions, we look at probabilities. So we will go ahead and add the Recon Auto Fib Retracement indicator, and this will give us some targets to actually look at. And the first target that you might notice is the 618 level, which is coming in at 48.5, which is in line with this 48,000 level we were looking at back here. If we check our 6, that is resistance. So somewhere between 40,000 and probably 48.5. That could be a level of resistance for Bitcoin. Now, if Bitcoin's price is able to push through that level, the next level we're looking up at could be the 786 level. However, before we jump the gun and take a look at the 786 or 57,500 level, the next key level of resistance, more than likely, is going to be around this 52,000, and in reality, more than likely between 50,000 and 52,000. However, with that being said, the way I use the Fibonacci retracement is a break above the 618 often leads to a push up to the 786, where that 786 tends to act as resistance. And so if you're feeling froggy, you might jump in on the break of the 618 and go long with the anticipated price of hitting up here around 57.5. Again, these are weekly candles, so this is longer term analysis. You're not going to necessarily get that pump overnight, but you might. It's Bitcoin after all. Now, after 786, if the bulls continue this run and push above 57.5, well then, in reality, they're more than likely looking back up here at the all-time high of 69,000, which obviously, again, is the all-time high back here in November of 2021. Now, on the flip side, if the bulls run out of steam and get rejected maybe at the 618 or even get rejected here at 45,000 and the bears are able to crush this price down, obviously the first level they need to get it back down below is going to be 42,000. A breakdown below 42,000 could have Bitcoin's price beginning to sell off down here to the 382 level, which is right around 36,000, and that would be this prior support here. And if we look back further and check our 6, that also acted kind of as support back in this area as well. However, before we get ahead of ourselves, a breakdown below 42,000, and in reality, more than likely going to find some support around 40,000 to 39,000. And if we jump over here to the Bitcoin CME futures on daily candles, that would fall in line with this gap here. These gaps often get filled, and in this case, for this gap to get filled, Bitcoin would need to sell off down here to around 39,000. So with that being said, if Bitcoin's price is getting overextended, you typically see a pullback, and that pullback might look like something down here to 39,000. And thus filling the CME gap. So jumping back over here to the weekly candles, if Bitcoin's price does start to sell off, breaks down below 40,000, your next target would be 36,000. After that, then it's pretty much open air all the way down here to the 236 level, which is around 28,000. Actually, a breakdown below 28,000, and then Bitcoin could be in serious trouble, and the bleeding could continue all the way down here to around 15.5, which would be this low here. However, the current trend of Bitcoin is setting higher highs and higher lows. And so the probability right now is we're going to have another higher high and then perhaps a higher low on a bit of a retracement before the next leg up. Now, if we drop in the Recon EMA ribbon indicator, you can see Bitcoin is getting a bit extended and pulling pretty far away from the ribbon. And typically what we would see is a pull away from the ribbon, a retracement back to the ribbon for support, like we see on these two moves here. And so Bitcoin's price may be primed for a simple pullback into the ribbon, find support, and then start its next leg up. The worst thing we could see is Bitcoin crashing down below the ribbon like we see here and then selling off. But right now, again, the trend of Bitcoin is up. It's bullish. And given some of the other factors, including the possible ETF approvals. Now, keep in mind, I do want to issue a bit of a warning. You typically buy the rumor, sell the news. So right now, there's the rumor that the ETFs are going to get approved. Once one of these ETFs actually gets approved, that would be news, and we could see a bit of a sell-off in Bitcoin. And that might be what triggers the retracement for Bitcoin. And then the next catalyst to push Bitcoin's price up would be the halving, which is scheduled to happen early next year. And then we might see that run to an all-time new high. So I think that pretty much wraps it up for this video. If you like this video, do me a favor, spike a like. If you like these type of videos, you might want to shoot that subscribe button so you don't miss out on future videos. And of course, if you have any questions or comments, drop them in the comment section down below. So until next time, remember, never send your money into battle without first doing your recon. See you in the next video.